Hello again. I've labelled this part 2 of forex price action trading because it actually follows on from the previous video, so yesterday's video, showing you what happened after price hit a level of support and resistance and gave us another alert. And as you can see, I talked about this yesterday, we were trading against an H1, H4, H1 stroke H4 massive uptrend, which was really part of a pullback on the weekly move. Wouldn't be surprised if it the weekly move. We've got a massive weekly downtrend here. If you wanted to put Fibonacci's on here, you could do and say that price is running somewhere around potentially up to this level here. Well, 38.2, 50%, the all important 61.8. I'd say this with tongue in cheek because I don't actually use Fibonacci's, but some love them, I don't. What I would suggest this may be coming back to test is the recent support, strong support. This is weekly chart, remember, broken, and then potentially going to be tested as resistance there in the bigger move. If we are to believe the technicals rule the roost. Obviously, being a pound related pair, this is strongly affected by Brexit, but I don't trade either Fibonacci's, Brexit, or hearsay. All I trade is my hourly and 30-minute reversals with the 5-minute and 1-minute trends. So whilst this is sort of useful information to have in the back of your mind, it is pretty useless otherwise. Anyway, I digress, but the point is it's all about the higher time frames ruling the direction of trade. Now we've got a seriously strong H4 level of resistance up here that has affected price and pushed it down like it had here for days and days and days. So let's stick a level on top of there, and we can see price is likely to smack that. So we're going to get to about 144, possibly a bit beyond, and then I wouldn't be surprised if we have quite a strong reaction to that. Again, that wasn't taken into account with today's trade. Today's trade was all about just the H1 reversal here and so on and so forth. But let's just talk about yesterday's second trade of the day. As I said, we were on an H4, H1 uptrend, and I just wanted to take advantage of the H1 reversal to the downside, a potential test of an area, a strong area down here, which I talked about this level here, where the hourly candles kept hitting and reversing, as it were, testing it in the to the resistance side. Finally flipped over here, so I was happy to go for my normal 10 to 12 pips in that move of the day, and then as I said at that point, we were likely to be going to the long side. So when I got a 30-minute alert there to the long side, I took the trade and just took it to the next significant number, 142.50. As we can see, the price continued up for a good 100 or so pips. But as I've said many times before, and this is quite important, I've traded I like to trade pre-London Open. I entered the first trade short there and took the 12 pips at 7 a.m. and then I was out of my trade there by just gone 9 p.m. So 2 hours trading. You don't have to worry about what the big boys are doing here, really, in my opinion, and take the trade. So that was the part 2 of yesterday's trading, a couple of trades a day, and then today's trading was here, based on, as I said before, the H1 reversal there to the long side, dropped down, and that was quite early on in the morning. That was remember, there's 2 hours difference between the server time and UK actual time, so that was 3 a.m. was the, or 2 a.m. was the alert, 3 a.m. was the next candle, or possibly the close of the candle, open of the candle, yeah, so 3 a.m. But I'm not going to worry about the detail there too much. I set my alarm for just gone 5, so we are, can't see it under that level there, but 5 a.m. is there, so 5:15, it's actually 5:15 my alarm goes off, or is it 5? 5 my alarm goes off. So did my analysis. We've got an M15 down. I wasn't prepared to wait for an M15 up because I might miss the opportunity, so what I did was actually drop down to the 5 minute. Bearing in mind I was pretty confident that this, these H1 reversals outside of normal business hours, if you like, are stronger in my opinion, because they're a sort of positioning, grinding, algorithmic sort of movement, as opposed to the big dealers whacking on millions and millions of pounds and or dollars, or whatever you want to call it. So that's the logic behind that. Entered the trade as the M1 or the M5 was forming, but the M1 had definitely started creating an uptrend there. If you look at M1, definitely trending up, low, high, high, low, high, 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 low, high, high. So hit the trade on this candle here. That's the spread, and then aimed for around this area, an arbitrary 12 to 15 pips. So I got my pippage. We had a little bit of drawdown, but nothing to worry about, because I'm at that stage. I'm making my breakfast, or making a coffee, should I say. And once we had a pullback, I came back into the arena, as it were, and what I wanted to see here was an M1 higher high. So we've talked about trends. A green candle effectively is the start of a trend. The following green candle is actually a trend: low, high, higher, low, higher, high. If I can explain that by looking at the 5 minute chart over here, you will see hopefully a similar scenario where you've got a couple of candles. 2 green candles represents a trend, even though they're smaller candles. You get the drift: low, high, higher, low, and a higher high on that green candle. That is a trend. That is what I want to be doing. I do not want to be getting in on this candle, because you can't sing the song. I do not want to be getting in on this candle. I don't really want to be getting in on this candle, because it's actually a higher high and then a higher low, because it's a red candle. So that one possibly would have been okay, but it breaks the rule of 2 green candles. So that's the tighter entry. But remember, all these 2 candles here will represent a semblance of a trend. That's what they are there in effect. One 5 minute candle is 5 1 minute candles. So as you can see, you're getting, that's the trend there. If you look on the line chart to show you even more detail, sorry, I do apologise, didn't do that right, then you can see the lower lows, higher lows and higher highs forming. So that's the analysis I use on top of just the plain alerts. And so there was a very fast move there. Same thing, 11 or 12 pips, can't remember exactly, 11 or 12 pips there, so 22 pips or 24 pips, somewhere around there. And that is 2 trades for this morning. So it's just about logic, and as you can see, that's moving up to that level that I drew on the monthly oh, it's the H4 high, that area there, which should cause a bit of a problem for price. Remember also you've got all this support in there as well, so there's all sorts of things that are likely to cause the price to reverse. So if it does reverse, I shall produce part 3 of this price action trading video to show you a potential entry to the short side. Okay, thank you for watching and hope this helped.